the average small business owner doesn't know what to do. Income tax is negotiable.
You could probably qualify for 20, 30, 40 deductions.
I think trust is probably the most important thing.
We don't need to replace someone that you're happy with.
We try to uncover things you've never heard of.
If you do a strategy like that, as long as you do things the right way, you don't have anything to worry about.
So, now it makes sense.
We'll actually create a free entity for anybody listening to this podcast. And then in addition to that, it's a free strategy phone call.
What up, D2D world? JP here with Devan and Shawn from the Tax Hive.
Yeah.
Right? So, as always, try to bring content to the door-to-door world, the things that help us do our job better every day and prepare and save for our families and build some generational wealth. So we got some tax guys in here today. Devan, why don't you tell us a little bit about Tax Hive and what you all do?
Yeah, absolutely. I mean, I think the first thing I'll say is everybody just turn it off right now. Everybody should just go overpay on taxes, right? We'd all be better off.
Let's do that.
Let's just send more money to the government. They're real good stewards of it.
That pothole will still be there when I...
Yeah. So Tax Hive, we've been in the tax business a long time, kind of decades long deal. And we're partnered with Kevin O'Leary, Mr. Wonderful from Shark Tank. He's not just a spokesperson for us. He's actually an equity partner in the business. Tax Hive has just been basically taking care of small business owners. So we do the normal tax disciplines of bookkeeping, tax prep work. But the thing that really sets us apart for a business owner is that we're a strategic planning advisory service business. So you think the average business owner, what are they paying in taxes? And if you go on Twitter or X, right, you hear a lot of rumblings of like, oh, Elon Musk pays nothing, Warren Buffett pays nothing. It's like, hold on a second. Is it because the tax code just specifically lists those guys by name that they don't pay as much as the rest of us? Or are they just taking full advantage of the code? And the average small business owner doesn't know what to do.
Being a small business owner for my entire life on top of my day jobs, you're right. I mean, now I have enough education where I'm like, look, I'm selling that property. I'm going to have some gains there, but I'm starting this franchise, so I'm going to lose. I'm going to have some startup costs there. It's probably
offsetting
expenses. But I really don't know. I just know enough to, this would be a good timing. I got to get done by, so it can offset. So that stuff is there, but you're right. I have no idea whatsoever. Investment buddy of mine, we bought some mobile homes in Texas, not the land, just the homes. And we accelerated the depreciation on it. And we then decided after a couple of years that maybe it wasn't the best investment that we wanted to be in long term. So then when we sold them, we're like, well, shit, now we got to go recapture all that. Sure. And I'm like, well, can't we just, this is, can we 1031 it? They're like, well, not if you depreciated it all up front because you treated it like the mobile home and not like the house. And I'm like, well, come on,
I need a double dip.
Yeah, exactly. Right. And so I'm like, well, crap, I don't want to, it was great. I mean, and when you look about my history, it was great timing because all my stock options had just vested with Vivint. And so I had this huge income year. At the same time, I accelerated the depreciation on that stuff and got a huge tax check back. I'm like, sweet. Right. And then I'm like, well, now we're selling them. I got to find some other way to offset that.
Yes.
And so I am literally like a robot vacuum bouncing off different financial decisions I've used with no clear idea. So, yes, so I'm probably your ideal candidate.
Well, just, the problem is when you are a W-2, you can take up to 10 deductions. That's it. So most people take 2 or 3. And then you make that leap to say, I'm going door to door and I'm 1099 and I'm now a business owner or I have an LLC. And no one says, okay, here's your crash course. We're going to sit you down and show you that there's actually, you could probably qualify for 20, 30, 40 deductions that you may qualify for. And so they end up just going back to their mindset of W-2 and they take 2 or 3. We look at their last year's taxes in our planning and they're just not taking enough deductions.
So let's talk about that because I was a business owner from, as anybody in door-to-door, basically I was 1099 from the day I graduated college and got referred to a tax guy that treated me well, but didn't really educate me. Didn't really know what effective tax rate was, or I don't even know if I'm using the right term, right?
Sure, yeah.
It's like,
what is your effective tax rate?
So I don't embarrass myself, what is an effective tax rate? And how would you explain that to people?
Yeah. So I would just start first and foremost with your income, how much money is flowing into your business, how many expenses do you have, right? And what is your adjusted gross income? That would be like income post deductions, but pre-tax, before you've paid any tax. And a lot of people actually view the effective tax rate maybe through the wrong lens. Like when we ask questions to business owners, like, how much do you pay in tax? And their mind immediately goes like, well, I think last year I paid like 23%. It's like, whoa, no. Income tax is only 1/10 of the tax implication. Your effective tax rate is like your all in tax. So income tax, you own property, pay property taxes. You shop at the convenience store or the grocery store.
I'm getting anxiety just by
right.
But keep on going.
You pay sales tax.
Yeah,
okay. Like things are so
gas tax.
Yeah. Look at your phone bill, the UCC tax. It's like, what is that? You pay for your license and registration for your vehicle. That's a tax. Any license that you got as a door-to-door guy in your local, county or whatever, city, whatever they require from a licensing perspective, that's a tax. Most taxes are not negotiable, right? Like I can't go, when I go to Harmon's with my 4 little kids and I'm like, well, hold on, cashier. You see Ella and William and Lincoln and Lily, like I've got dependents. I shouldn't be paying this tax. And they're like, that's, what? Yeah, what? That's not negotiable, but income tax is negotiable. It's something that you can actually have an impact on, and you have to understand the tax code. And we at Tax Hive, we would tell the standard business owner that your tax preparer is doing what you've hired them to do, which is prepare your taxes. Most CPAs and accountants don't do any planning.
Right.
They're not in the business of tax strategy. And so anyway, when you talk about effective tax rate, it's like, my goodness, we're taxed when
50%.
You're taxed when you buy it. You're taxed when you own it. You're taxed when you sell it. And in the case of healthcare in this country, you're taxed if you don't buy it. Imagine that.
So you should be very wise in that one area you can affect, which is your income tax, to try to stack up the deductions, right?
Yeah.
Right. So I've bounced, I'll just use me as an example here, because there's probably a lot of people in this industry. I've bounced, I was 1099 for the first, well, of course I incorporated, right? But 1099, then incorporated, and then LLC, then incorporated, and then W-2, and then 1099. And
you
then
bounced all over.
I'm like, especially in the last 4 or 5 years, I'm like, oh my God, like there's trade-offs to both.
Yeah.
And so the strategies that strategies through my robot vacuuming, through my understanding of tax codes and how not to pay maximum tax, having a business while being W-2'd obviously helps, right? Because you can,
yes,
I don't want to say double dip, but you are able to offset, right? Like, and I don't even know if it's legal, but for example, I have an indoor golf simulator here in Utah, Sandy, Utah, called Back Nine. Come join it. We'd love to have a member, but shout out my own commercial on our podcast. But I have YouTube TV there, for example, so they can watch NFL Sunday Ticket. Well, I don't have YouTube TV at my house. I just log into my work one, right?
Sure.
Right.
Yeah.
And I know it's such a small example, but there's, the
overlapping benefits.
Is that what it's called? Right.
Sure. I mean, you definitely don't want to commingle funds.
Right. No, I have separate.
But you're not, there's nothing prohibiting you from benefiting from something that your business purchased. Yeah, I mean, to your point, you've basically said, hey, I have W-2, 1099, I've incorporated, I've sometimes done both, right? I've had a side hustle. And for most people out there, I think your circumstances change, and they change regularly. And if you're not planning, if you're not thinking through the tax implications of whatever action is happening, you sold your business, you acquired a business, you added another location, all of those things have tax implications. And we just like to say, hey, your tax preparer is a little bit like the cashier at the grocery store.
No.
But he
charges me a lot of money to do that.
Yeah. He tells you what you owe, right? He's
but then he's like, and then you owe me this for doing that. And I was like, what?
Right. Yeah. But
that's how it goes. Yeah.
Your tax preparer doesn't follow you around the grocery store and say, oh, here's a coupon.
Right.
Here's a rebate. Oh, actually go buy this, go down this aisle, not that aisle. And tax strategy is just a different discipline. It's what our specialty is. And alongside that strategy advisory service, opportunity that we have with business owners, we'll also do your taxes if you want us to file them. But that's like a, dime a dozen. You could open the phone book and find anybody that'll do that.
Outside my mortgage, I think outside my kids' private education, I think the check I write to my CPA to do because the LLCs that all own these different things that now this year we sold everything. So hopefully in 2025 it'd be less, but like, holy hell, I'm right now. It's like the big hefty. It's a big old check to pay for, and he's great, does a good job. But when I call him for 15 minutes and he sends me a bill, I'm like, wait, how does that work also?
Yeah.
For sure.
I mean, here's the burden for someone like yourself. The tax code is about 70,000 plus pages long. There's over 1,400 deductions. The deductions are just the start of it. There's credits, there's gaps, there's dynasty strategies. You get all kinds of like advanced stuff. And you could hop on Reddit or YouTube or, TikTok and find out about the home office deduction and figure out about how to write off your vehicle or your mileage, right? And you could read about Rule 280A, the Augusta rule. But most people, even when they understand a strategy, if they don't have someone with expertise like Tax Hive saying, this is actually what the IRS is looking for, this is how you document it, you're almost too scared to do it because you don't want to end up like you don't want to be Wesley Snipes or Al Capone, right? And so
you just put those two guys in the same sentence. That's pretty impressive. So let's talk a little bit about the services you provide specifically to our door-to-door clients. So we have anybody listening to this podcast that is a solo sales rep out making a couple $100,000 a year, or just getting into the industry, making $50,000 a year. And then we have business owners that run, $5 million pest control companies or $20 million roofing companies, and the likes. So who is your ideal client of our audience?
Both.
Okay. We love them all.
Yeah, we love them all. We help someone that's done, just done their first $100,000 in revenue. Is if you're a business that has revenue, there are tax implications.
Now, when you say business, just so I'm clear, I am thinking about the LLC
1099.
or
1099.
1099 individual that's receiving $100,000 for commission.
They might not see themselves as a business,
or even $50,000.
Right. But they are operating an independent contractor, right? Yeah. Not a W-2 employee of a business. It's like, okay, I have revenue flowing into my entity, or I'm a sole proprietor and I just have money coming to me personally, which problem, right? Which for a door-to-door person, our relationship with you guys is such that we'll actually create a free entity for anybody listening to this podcast.
So no more LegalZoom.
Right. Yeah. Yeah. You get what you pay for.
Right.
And LegalZoom is exactly that. It's not just about drafting documents and setting up an entity. It's the words within that entity, right, that matter. And so anyway, yeah, we're partnered with a group that will basically set up a free LLC for you. Most of them are probably beyond that stage of it, but if they're not, great, free entity courtesy of the Tax Hive relationship. And then in addition to that, it's a free strategy phone call. Let's hop on a call and let's see what you own, how much revenue is flowing through your, entity or into your business. And we service everyone from, hey, I just did my first $100,000 in sales income, to the $5 million, $10 million plus, business owner that also needs tax strategy the same way that all of their individual reps would need tax strategy.
So the person watching the podcast right now is like, why these guys? Why should I? I mean, at the end of the day, I have a mechanic that I trust, right? And I'll trust him until I realize maybe he's overcharging me, right? I have certain people, that I trust to be involved with my day-to-day life until I feel like maybe they're charging me too much. So I think trust is probably the most important thing. And I would imagine your clients are the same. If you do good work and you trust them and you don't gouge them, your retention is probably really, really high. So what separates you as far as what you provide to maybe other competitors? And the answer may be nothing. You must be just two cool dudes that run a good company that have an opportunity to grow. But what is the differentiator that you might offer?
It's usually the hair.
I saw you when you came in.
Good.
Yeah,
you guys
exactly.
both look good.
Shawn over here, man.
Like I gotta compensate over here.
Yeah, it's secretly I am jealous because if I had hair, it would be different hairstyles.
Oh man, I can't imagine what my bank account would look like if I had a head of hair.
Exactly.
It'd be wild.
Mohawk for a year and then diet for a year. Well, I'm a blonde now. I would be that guy for sure. Yeah. And I can only say that because I've been bald since longer than I have had hair.
So to answer your question, I think the trust factor is massive, and most people work with an aunt or an uncle or a guy that they got a referral from, like, oh, this is my tax guy. And the first thing that I would say is if you're happy with whomever you're working with, we don't mind you continuing to work with them. So we don't need to replace someone that you're happy with. But the distinction is that most of those people are not specialized in the way that we are specialized. They're doing a completely different service. So like you mentioned, the mechanic, your average mechanic might be able to change your oil, swap out your tires, replace your brakes, right? But the forensics that it takes on a tax strategy, like advisory services, what do you own? Where do you own it? How much revenue is flowing through your business? And what are the opportunities for you within the tax code? Your average CPA or accountant is not specialized in doing. In fact, a lot of plans that we deliver, we'll deliver a plan and it'll outline, here's the strategy, here's what you're going to do, and here's how you're going to document it. And they'll hand it off to their CPA, and they're like, how come you didn't tell me about this? And they're like, well, I don't really do that. Or I don't really even know if you can do that. And it's like, it's just something that what makes us unique is that we are the forensics. We're the people that take a deep dive on your last 2 years' tax returns, identify all of the gaps and missing opportunities for you.
And then you refile?
Not necessarily refile. In some cases, yes. If you wanted to amend a return, if you documented some things that you didn't take advantage of, sure. Most of what we do is forward faith. Like, what are we going to do about this year that we're in right now?
Gotcha.
And then from another trust factor, I would just say Kevin O'Leary doesn't just partner with any random group off the street.
So obviously people are like, well, how do those guys get in touch with you? What's the connection there? And you're right, savvy enough to if anybody's watched Shark Tank, know that he's not going to. I think there's a trade-off, obviously, if you take his money off us, take him. Obviously, I don't know him. I'm just saying that because his personality on TV says I should say that. But what is it about your business that he says this is why I'm investing in it?
I could just tell you quick. So we've known Kevin. So we used to promote Kevin on big stage events. So entrepreneur stuff, people would pay tickets and go see Kevin speak, and we promoted all that. So we got to know him really well. I don't know how many times we were with him in so many kitchens like through the belly of the beast to the hotels, getting him up on stages and stuff. And so we knew him for a long time. COVID kicks in, we're not doing events. We have a great relationship with him. We sent him a text, said, hey, we have a business we want to present to you. He didn't. I don't know how much we teed him up for it, but he's like, hey, I'm in Arizona. So we all went down to Arizona. Our CEO, Chris Brown, got up and launched into the presentation, and about 5 or 6 minutes in, he does one of these, like, stop, like a Simon Cowell moment, you know what I mean? Right. And I still remember like my heart sinking, going, okay, well, that was because a lot was riding on it, because if he he's seeing millions of people watch his videos on a weekly basis. Right. Imagine if we can market that brand and have him as a marketing partner to Tax Hive. It's a lot's riding on that. So him saying stop, or like, oh, well, this didn't work out. And he said, hey, I'm in and let's do this, because he had actually been out. He meets with his tax pros every 14 days all year round, right? And so he's like been out presenting like, hey, one of you, the areas you're all missing is tax planning. You have to tax plan. And no one does it because they put it out of sight, out of mind, right? It's the last thing on their mind. And so he's like, now I can monetize with his message. So he's become an incredible marketing partner.
Yeah.
With Tax Hive.
So it's a long-standing relationship, and Tax Hive had been in the tax business for many years prior to that, but it was like right as some of those changes took place, it's like, hey, we might be able to utilize this relationship on the tax business as well, and it's been good.
So I think I understand the CPA world of you get a book of business of X number of people you do taxes for. It's reoccurring in a sense. Those that have higher needs, more income, more meetings, more. They're trying to maybe use their CPA as their strategist, right? There's a billable hour associated with all that. So your business model financially, right? So people listening is like, why would I call these guys? How do they charge? I'm assuming you're going to charge somebody for their taxes. You're going to charge somebody for, well, I don't know what after that. So the strategy side, is it a contract? Is it a per call? Like, what is that?
Yeah. So we're basically a one-time fee service on the tax planning side. And we deliver a plan to someone. They can use it in year 2, year 3, year 4. The average tax plan that we deliver is identifying upwards of about 50 grand in savings a year to a business owner. If you're in a higher income, like if your business is $1 million plus, then the tax plan is going to be more like 100 grand plus in, discovered savings.
Right.
And our pricing structure is basically proportionate to revenue. So the more money you have flowing through your business, the more opportunity you have within the tax code, not just from a deduction standpoint, but also from like a dynasty strategy. Can you even afford to go do an accelerated, charitable contribution type strategy? And if you're doing 150K a year, odds are you don't have enough revenue flowing through your business to even identify that strategy as an opportunity. So summarize it to say, the more revenue you have, the more strategies that are available to you in the tax code, and the more work it takes us to prepare and build your plan and deliver it to you, and then also implement it with you and teach you what to do with each strategy.
I'm going to take advantage of the mic and the two people sitting on camera, and I'm just going to use me again as an example. I know that I'm probably not taking advantage of paying my kids, right?
Yeah,
and
sure.
That's a real strategy.
Real.
I set it up. I got LLCs in each of their name. Like I was teaching them business, like the mobile homes in Texas. They were in a LLC called C Money. Yeah. That is my middle child's nickname.
Love it.
We raised some money and bought some homes in Chattanooga that we're selling. We got down to one left. That LLC is in J-Man, which is my oldest's nickname, right? So I've had conversations. So they say, Dad, what are we doing with the houses? And we can talk about investment. But just the way, like, my life has been on auto pay for years, money in, money out. Right. Like my wife we don't have financial conversations, right? I got it figured out, like everything's on auto pay. But because of that, the money is not going to a certain spot to then go to another spot. So I have a bank account that's for my kids. That, I'm a executive education coach at Harvard Business School. I do coaching in the professional leadership development program there. That money, then when they pay me, they W-2 me, unfortunately, but that money they pay me goes into a bank account. And then that bank account literally pays for private school. It pays for all the baseball bats, all the gloves, anything kid activity related. Yeah. And so I know for a fact I'm doing that wrong. Yeah. Okay. I got it halfway set up.
Yeah. Sure.
So, as some podcast time and some education to those, I think then I should probably put that money. Can I put that money into one of my businesses, and then pay my kids from those accounts, and then use those accounts to pay their schooling? Is that how I set that up, or what am I missing on how to properly use the tax code to make private school tax deductible?
Yeah. So I think the first part of this answer is to say that neither Shawn nor I are licensed tax advisors.
Correct.
Okay.
Correct.
So we have.
I have assumed that, but thank you.
We have the guys. We have the guys in-house, right? And this is actually a good point. All of our fulfillment is in-house.
Right.
We don't outsource. You might, hear of an outfit somewhere else that does tax planning and a bunch of other services, and it's like the next thing you know, you're on the phone with someone that is not even in, on our continent, let alone in our country. And anyway, so our team of professionals, licensed CPAs, accountants, are the ones that would take a look at an individual circumstance like that and say, oh yeah, okay, so here's what's happening. You're getting money through W-2. It's going into this bank account, and now you're hoping to have that money pay for your kids' expenses of being a kid, right? Like baseball equipment and other stuff. And the fast track short answer on this would just be that if you're paying your kids you can't take W-2 money and deposit it into a kid's bank account.
Correct. I know that much.
And then, pretend that somehow that was income from them doing the job that they're doing for you within the business. They have to, if you're paying your kids, they have to actually be doing something for the business. It has to be a legitimate.
They come with me every Sunday to go clean our golf franchise.
Yeah.
So they do.
Nice, okay.
They'll stock the fridge. They clean it.
So they're doing work.
They're doing work.
Business.
But in order to take private school money out of that business, there isn't enough to do that. So again, do I put an owner contribution back into that business and then pay them out of that? Right. And again, if your guy was here, is like
for sure.
So these are real. Like I know, and I'm like, I don't know how to set that up correctly. It's a pain in the ass. I don't want to do it wrong.
Sure. Yeah.
But I realize it's like $30,000 a year that I'm.
That's right.
Probably not.
Yeah. So there's really two areas. So one is just the basic tax, like because small business owners are underserved. So if they go to the big accounting for, and the big accounting for is going to be like add a couple of zeros and then come back and see us when you're a bigger size. So small business owners, this is a standard. This happens on an hourly. We're talking to small business owners every hour. They just don't know where to go. And so they just kind of go scrap and kind of do it all. So even on the basic deductions, the child, paying your children, the section 179, how you buy your car, right? All the basic home deduction, which your 1099s are taken, all those, they just don't know what to do. So they take very little of those, just the basics. So our team helps them take the maximum benefit in each one of those basic things. Mileage on your car, paying expenses in your business. And then two is we try to uncover things you've never heard of. Yep. And I'll give you a quick example.
Yeah, wow me.
Okay, so I lived in Augusta, Georgia for a while. Right?
Okay, we'll stop right there.
Yeah.
How do I get on?
Yeah, I know. I'm still trying to figure it out.
Okay. All right.
And so the way I did it is not the way I'd recommend, which is I actually pulled my car over and I snuck out on the course at night. So
fence hopper.
Yeah.
So I didn't get tased some reason, which is a miracle. But the reason why it's just I love it's hallowed ground. It's such a beautiful. I mean, just seeing the course up close. I mean, it's velvet. But if you stand there and you look at that space, there's no hotels. There's no shiny big Hiltons on it at all. They kept it pristine. So they're just neighborhoods. Well, as you know, the tournament's 2 weeks a year. And 250,000 people descend on Augusta, Georgia every year. So if you're an Augusta Georgian, you move, right? A national comes in, you're out of there for 2 weeks. You do not want anything to do with the restaurants there or anything. So your vacation time is 2 weeks a year.
So I lived in Pasadena for 17 years. And
so
we'd be gone. I did 1 year.
That's
and then
right.
My office was on Colorado Boulevard. I'm like, I'm gone for 4 days. I'm out.
Yeah.
Peace.
So those Georgians got sick of paying. They're paying, getting rent for that time. So they just rent out their homes for upwards of a lot of money.
Right,
and so let's say that they're bringing in $10,000 in the 2 weeks. They'd be a tax liability of $3 or $4 grand, or if it's 20 grand, it'd be like 5 to 8. So they got just tired of paying that money. So they go get a lobbyist. The lobbyist goes in front of Congress.
Somebody made a phone call.
Right? Goes in front of Congress. They approve. Now it's federal law with this Augusta rule, which means you as a business owner, now all 50 states can do it. Now you as a business owner, if you're structured correctly, you can rent out your home to your business for up to 14 days a year, tax-free.
So
right?
Is it like $10,000 a year?
It just depends. It's kind of closer to market rate.
Yeah,
right?
it's market rate. You'd go to a service like peerspace.com and basically comp it out. Say, oh, here's the going rate in my area. Here's what I can, charge my business. And the income to you on the individual level is tax-free, and the deduction to your business on the expense but you have to actually hold a meeting.
Yeah. So
it has to be a real business purpose. You have to hold the meetings.
So I've heard of this. I have a beautiful home coming from California. People come to my house here in Utah. They're like,
got a lot of equity,
right?
Yeah.
And I'm like, you have to realize that my mortgage payment went down by $1,100 when I moved here.
Right.
Yeah,
Sure.
yeah.
2016 was a really good time to come from California to buy a home in Utah. And so I've had events I've had 80 people events in my backyard, 4 work related. And I've never done it right.
Yeah.
Like ever.
Wow. Yeah.
And now I remember one year I did have a discussion with one CPA, and I think I'm always thinking in the back of my mind that that's the one thing that's going to flag me. Like this, right? The thing that I've never done before, all of a sudden I just rented out my house for, we just got hit up the other day if somebody wants to do a wedding in our backyard, right? And I'm like, I don't even know what to charge, right? But I know how much wedding venues charge, but I would never charge them that because they're friends, family, right? But I sure would charge myself that if the money's coming back, right?
Yeah,
right. So this Augusta rule is real, is something.
Yeah, so I think, to me, there's one of my favorite books is called Who Not How. It's by Dan Sullivan. And it's essentially entrepreneurs ask themselves the wrong question. It's how do I do this, right? How do I do this? And how do I do that? And you end up wearing 12 hats thinking that you can figure out how to do everything yourself. And you should be asking, who is the person I can work with that is a true expert in this area, that I will have peace of mind of not thinking this is the one area I'm going to get flagged, like you mentioned.
Right.
Because I actually have a professional that's going to make sure the T's are crossed, and everything, the I's are dotted. And you can feel confident, hey, this is actually the code, how it reads. These are the requirements. And then the tax professionals are going to go make that happen for you. That's where we step in.
Yeah, and if I get a paper audit about that one thing, I'm in a defensible position. Here are my documents. Here's my comps from peerspace.com. You're good.
So you have to go through the process of signing the contract from the business to the individual. There's got to be a form of payment, which is all the things that, like, I know it's
you don't want to bother with.
Like, my mortgage broker calls me literally once a week to refi because I bought a house in 16 and amortized in 21.
Sure.
My payment went down, and then next thing you know, I go 1099 and I don't refi in time. Rates go up, and I'm like, now I'm paying like $2,000 more than I was, and I know I would save $1,100 a month if I just took the time to sit down and I haven't finished my 20.
But uploading your documents.
But I haven't finished my 23 taxes.
Okay.
Right. But I was waiting on a document, which I now have.
Yeah.
Right. But he doesn't need my 23s. He needs the last two. And I'm like, but that makes me emotionally go, well, shit, now it's just going to remind me that I haven't done and I'm avoiding this.
Yes.
And I know it'd save me $12,000 a year.
Yes.
And I'm like, oh, right. And that's, So
imagine what you would do for an extra $12,000, $20,000, $50,000. Like if you saw the tax plans that Shawn and I have seen, it's like mind blowing how much money people leave on the table just out of the comfort of, like, I don't really want to think about that.
Yeah. So I'm going to this is such a great podcast. I have to do talk about all the shit that I've done, mistakes I've made, and people are going to learn from them.
And the headline of, like, taxes, people are like, I'm not watching that.
So when I moved to Utah and I went W-2 for the first time in my life, I was smart enough to go, shit, right? I'm W-2'd here, and I'm like, right? I see the taxes coming out. So I called a buddy who's in the financial space. He deals with lots of people's, NFL, NBA type money, right?
Yep.
And so I call him and I go, here's my scenario. And he refers me to the time of a land easement. What the heck's that called? A conservation land easement, right?
Yep.
So I just want I want to read you right now on whether or not that was a proper strategy to go or not something you'd recommend.
Yeah. So I would say that things like conservation easements got bastardized is maybe the best way to say it, like misused, taken advantage of. And so when you think about, like, red flag strategies, like, oh, is this something that's going to raise? And so just suffice it to say, if you do a strategy like that, as long as you do things the right way, you don't have anything to worry about.
So let's pause you there, right? So I felt like I did things the right way, right? They've sent me over the paperwork. I read it. I understood it. Talked to the individual. I think a $25,000 investment got me a $110,000 charitable deduction, right? And I'm like, well, that was great, right?
Yeah.
So I remember doing my taxes that year, and it was like, without that one $25,000 investment, I would have got a like $84 tax return. But because I spent $25,000, I got a $49,000 tax return. Oof. So I'm like, I've doubled my money there. So I do it again and I do it again, right? So I do it a couple years in a row, and then the gentleman that was running the investment, he wasn't doing things correct.
Oh no.
Yeah.
Right?
Yep.
So then I get a notification that he the entity, not myself personally, is being under scrutiny. And while you guys were talking, I'm literally thinking about, I haven't heard from them in like 7-8 months. I wonder if it's gone away. Right. But I know and maybe I'll try to explain a conservation land easement, and then if you could tell everybody if I'm doing it wrong. So the idea that I was explained is this company would buy, say 2 pieces of property of right next door to each other for simple reasons. They develop one, or they have one has a development value of say $50 million, or let's do $10 million. And they donate the other one to charity of some sort, some land easement, but they get to write off the developed value of it. Is that basically the explanation of it? Close?
For where we're at, yes.
Okay, good. Perfect. And what apparently had happened is they were overvaluing the charitable contribution, something I had no control over. At least from, the
they
stuff.
rounded up.
Apparently they rounded up
to the nearest
with a comma
rounding error.
And so I get this random phone call from some entity representing some initial company or whatever it is. And so I just send them all the contracts they sent me, the information they sent me. But if they go and reassess those properties, then now I'm going to be stuck paying back and then penalties. Right. And I'm like, now, did I all that money that I quote made from those investments was real. I did go spend that on something else. In hindsight, maybe I just go put it in a coffin, bury it in the sand just in case this happens. But those are things that somebody that I trust, that invested their money in, that the guy was validated, but then he made mistakes. And what do you, as an individual business owner, right? These are fears when I meet guys like you that have these strategies, and I'm like, okay, well, this is something that's real. And the research that I've done, apparently like 2 of the CPAs on the team got in some hot water somehow, and they rolled on this guy as a way to get out of their hot water. Okay. And I'm like, well, shit, that's so far.
Sounds like a mess.
It's so far, like, if the paperwork is, as an investor, I knew what I was investing in. I was investing in a tax strategy. I do get my K1s every year. There's a little bit on there every year. I get all, but if somebody else is being manipulative or shady or whatever, it falls back on us. Okay. So I'm here listening to this podcast to you guys. The strategies that you recommend, right? Doesn't sound like you'd recommend the conservation easement, but what are things, is there any examples you can give on business owners that are maybe on the more aggressive side?
Yeah, I would probably cite the accelerated charitable contribution.
So educate me on that.
Yeah. So let's just pretend that you owe $100,000 to the IRS. Instead of writing a check for $100,000, let's just say that you take $50,000 and donate it to a qualified charity, right? You can't just donate it to like some random food bank or whatever. There's a, call it the Red Cross might be a qualified charity. Instead of sending that check up for $100,000 to the IRS, you now invest $50,000 in a charitable contribution, which, fist bump.
Yeah, I'll give you that.
You're a charitable person. You helped out
I might vomit here when you tell me the rest of the story, but go ahead.
Yeah. So what ends up happening is that you can get a 4 to 6 multiplier on your donation. So let's just easy math. Let's say you got a 5x multiplier on your $50,000. That's a $250,000 deduction. Now you're not saving $250,000 in taxes. You're getting a deduction. So let's pretend that now that you're in a 30 some odd % tax bracket. On the $250,000 deduction, it's actually an $80,000 savings. But you spent 50, so you're netted 30. And in summary, on the original $100,000, you would have paid 20 to the IRS, 50 to the Red Cross or whatever the qualified charity is, and your bank account would have 30,000.
Here's a real situation that I went through. Probably why I've been slow to do my taxes in future years, but so must have been 2021 taxes. I'm in St. George. We had just sold our home in Hawaii. We're 1031ing that into a property. We're looking at some space I remember where I was specifically, space in Desert Color. I was just talking to Sam about it today. I'm walking through this beautiful home, realizing it's got stairs. My dad's knocking, this ain't gonna work out. And my guy calls me and says, you owe $47,000. And I was like, that's funny because the thing that your person emailed me 2 weeks ago said I was getting a $20,000 return.
Right.
Wow, yeah.
Right. And now 2-3 weeks later, I owe government.
Like what changed?
Federal and state.
Right.
And he's like, we shouldn't have sent that out. I hadn't, looked at it yet. They were missing something, obviously, clearly.
Right.
So I'm like, I didn't say shit then,
day.
right? It's a bad day. So I then have to write a combo check between the IRS and the state, $47,000 to clear out my 21 taxes. Let's just round that to 50. So easy math. You're telling me I could have wrote a $25,000 check to a charitable or a verified charity. If I got a 4 multiplier, then it's $100,000. If I'm in a tax bracket, like there were savings there.
A $25,000 tax bracket is 25 grand on the 100.
So there was savings of about 25%. So instead of paying 50, I would have paid 35.
Sure. I mean, 50 minus 25 would have been 25.
But I still have to pay the
20. Yeah.
I pay the $25,000 charitable deduction, and then there's something left of that 25 that I would have got to keep.
Yeah. Yep.
Well, that's worth probably. I guess I can't amend it, right? I can't go back and ask for
money. It's like, is there a shady charity out there that will post date your contribution?
Okay, so this is like, so now if you're listening, I'm like, why do I want to call these guys? That's it right there, right?
Yeah,
that's this relationship, this conversation. Now, I guess I would need to have known I was going to have a tax liability prior to April.
That would have helped
had you anticipated in some
because
fashion.
in April it's too late to write. You can't. I'm assuming you can't donate
retro.
Right. Right. So
tax strategies usually work forward. But I think a lot of people, especially watching this, might be that 1099. They made 50 grand. They might be on the hook for 15 to 20,000 in tax of the 50 or whatever that number is.
Yep.
And we have a plan, and we make it extremely inexpensive working with your group for that person who's, just maybe even 10 grand this summer. And so we'll just help them file their taxes. We actually present them with a plan, as you grow plan. Here's ways you can save as you grow. And we feel like we want to give them a great experience. And so, like you said, they're a client for life.
Right.
That's what we're doing.
So when you say accelerated charitable deduction, that makes me think it's like a one-time thing. You can do this just once, or can you do it every year?
You could do it again.
Okay.
You could do it again.
So if you
hear about all the wealthy people that have their own foundation, their own charity, there's a reason behind it all.
Stop.
Yeah.
Oh, now it makes sense, right? So they go.
How many dynasty? There's so many dynasty strategies of the ultra wealthy, and they understand this game.
Bill Gates is just a really good person. It's in his heart.
Well, you win if you can figure this out. So, what constitutes a verified charitable organization? I've had a 501(c)(3) before. I don't think that would qualify, right? What qualifies as one of these charities that you can do that to?
Yeah, I would leave that question to our fulfillment team.
Fair enough.
Nationally recognized kind of thing. There's certain criteria
accreditation, but like when you go through our experience of a plan and that shows up in your plan, in every one of these cases, not just on the charitable side, but like in any other investment vehicle that has tax benefits, we have the relationship already in place to say, here's who you could go execute that with. And coming back to what Shawn was mentioning, a lot of the guys and gals listening to your podcast might be, doing their first 100 to 250 grand in revenue. And I would just, for that person, a lot of times they rationalize away their savings and they're like, oh, I'm not really making that much money yet. It's like, my goodness, the 15 to 20 grand that you could save right now is probably much more meaningful to you than it is the guy or gal that's a multi-million-dollar business that's looking to recapture an extra couple $100 grand.
Yeah.
It's like all those dollars matter.
Yeah, I think I know our audience well enough to know that these kind of stories that I'm just telling, they're like,
they're real.
They're real, but they're also like, oh snap! Like these guys know what they're talking about, and hopefully you all realize that I'm talking about situations you may not be in, but maybe some of you are in different situations. But there's value. You guys obviously know your stuff. I'm now picturing like, this is funny because I'm picturing like, oh, you own a verified charitable. I just donated 25 grand and somehow my kid got a scholarship. Like I have a feeling that money's getting
that's a whole nother.
That money's getting kicked back. Like now I'm like, oh, these wealthy people.
Those are advanced strategies that we haven't exactly tapped into.
But I know
yet.
like you may not.
Scholarship strategy.
Well, you may not like. I'm just now putting like the super wealthy together and they're like, oh, I donated to your charity $1 million and somehow I just got a new hospital wing built. Right. That money is being pushed around this world.
Yeah.
Fact.
The wealthy knows something, the ultra wealthy knows something we don't. Right. And really, as an average person, let's say making 50 grand a year in 1099, they should be able to have the same rights and access to the wealthy and do what the wealthy do to a degree. It'd be a much smaller scale, but they could go in there and save themselves $10,000.
Yeah.
That's significant for people.
Yeah.
Right.
This is good stuff. All right. So, you guys, how are you guys? We're just in a meeting with Dave in our biz dev. So how are we connected now? I texted him before I went in. I said, hey, if you guys feel right, let's get this podcast filmed today because all of our partners and vendors get podcasts with us. So what was the kind of agreement that you all worked out with D2D experts so we can offer that to our clients? Yeah,
we'll be you'll be receiving emails on the relationship. We have kind of out of the gates just a complimentary free entity setup, an LLC for anybody out there that needs it. If you're like, hey, I already got my corporate structure figured out, then it's like, okay, great. We could have a free strategy call to kind of explore some of the things that you just talked about, right? Like, hey, here's my situation and I don't know how much is really on deck for me to potentially save. You could have a free complimentary call. But if you're in the D2D ecosystem, you're going to see us in D2D University. You're going to see us on some, podcast stuff, maybe a webinar training, your email inbox.
We'll be at a lot of live events.
Together. Maybe a text message or two.
We're close to you down here. So we're
here in Utah?
Yeah. So we're going to drive up and attend as many as we can.
Yeah. The summits, like the sales summit, the recruiting summit, the high, obviously door-to-door condos are the high.
One of the ones we're going to bring, many of them, we're going to bring tax pros, our accountants and CPAs to go sit down with business owners here.
We should have brought them today because then afterwards, I could have got some free advice.
You need a good hour with those guys.
Like it's been, I love just talking out loud. I shares this stuff with people, right? But you guys are here. I'm like, what a mess.
Yeah.
Right. Like, and the fact that I've had to navigate this on my own.
Right.
And
how do I do this? How do I do that? I'm glad you brought up your personal experience because this is what
super
the aggravation and frustration and fear involved in that, right?
Yeah.
And when you backtrack the math on, like you're a relatively young dude, so you can only go back so many years.
I appreciate you saying that, but right? I bet I'm older than both of you.
Right. But if you can only go back 10 years like you and say, I've been overpaying for 10, what was the cumulative cost of ignoring the opportunity? And we, when we do an evaluation with a client, we'll say, okay, here's your tax plan. Here's the opportunity. And maybe you'll only capture 70, 80% of the opportunity because you don't want to bother with a couple of strategies in your plan. But man, take that and now, run it across the next 5 years. And for the average person that saves 50 grand a year, it's like, oh, there's an extra $250,000
that you could put to work
in the next 5 years. I could reinvest in my marketing. I could have been, driving a better car. I could have paid for an assistant, a virtual assistant, whatever. I don't know what your guys are in need of, but
I mean, I've been relatively /aggressive and proactive, but just that business piece of paying my kids. Like when I set up the account, when I set up the business, I should have just put the extra money in the original contribution, knowing that it was going to be distributed because I don't take a salary out of it, but I easily could have paid my, it's just, the anxiety that comes from trying to do everything and having somebody in their corner like you guys, I think would be great. So,
Amen.
All right. So how do they get a hold of you if they want to get a hold of you right now after the podcast? What do they do?
We actually have, a link, right?
Yeah.
That has our calendar on it.
Oh yeah. I'll just, we're at taxhive.com, but if you want the best price on, through the relationship with D2D, if you're listening to the podcast, you can just send me an email.
Yeah,
and I'll take care of you.
We'll edit that in. So,
Okay.
Christian, at this point, make sure you edit that in.
Let's push out that link for everyone, because if you go through the standard, you're not going to get the free LLC set up at all.
Yeah.
So we'll make sure we include that in the link to the podcast.
Yeah. So we'll make sure that's included.
Yeah. My guess is the landing page will be taxhive.com/D2D.
Okay.
So
but it's probably built by the time this is out.
Probably built by the time this is out. If needed, Devan at taxhive.com, mention the D2D experts and we'll take care of you.
Awesome. Thanks for coming in, fellas. This has been great.
It's an honor, JP.
It's a pleasure.
Thanks so much.
Cool.